Let's go. Fantastic. Okay, let me share the link with with the group. One second. And there we go. Okay, hope you are all are having a really good Sunday, enjoying with the family, doing whatever you like with your free time, with your work time. I'm having a good time lately. Even though I haven't been trading this, I think I do have a pretty clear view on what I expect on the market right now, on the market on BTC. I've been feeling comfortable with the few positions that I've taken with the on-chain trading that I've also been doing. So I think for the most part that is the sector of the market which is sorry. There's a lot of noise from a fan. But here, there we go. Um, as I was saying, Bitcoin not doing much, but as you've seen, so many shitcoins doing multiples during what you can consider a period of low volatility. I think it's a sector of the market which is interesting for the time being. So let's start with some basics of what I expect from Bitcoin for the foreseeable future. I think we put on this low on a Friday night, which wasn't amazing to be honest. I was expecting to be this price action trading something similar to this when some uptrend or range stops get taken, then you get a move and a long opportunity. You could say we had the same opportunity right here. Why? Because we did have some period of consolidation, some longs building up here. We couldn't flip this weekly pivot. Remember what a weekly pivot is? A weekly pivot comes from this. This was last week's close, and we couldn't flip it during the week. So for the time being, I do consider the market could be facing resistance right here. We go to the daily. We see a similar case here. This will be a daily. This is the most significant area for the if we manage to flip the weekly pivot. I'd be looking to fade any SFP that the market ends up doing around 29,700. Not only because of the daily pivot, as I was mentioning, but also because we do have a Q2 value area high right here. If we turn up the VWAP, we will see this quarterly. There we go. This is the VWAP from the last quarter of price action, and this was the value area high. So those are the contextual levels on the foreseeable future that I do believe are going to be good places to place any type of short if we manage to get an SFP. If we don't manage to get an SFP on daily or maybe 4 hour time from here, I'd be looking for the market to trade down to the downside and to test this another significant level around 28,300. Why? Again, remember this context. We do have a continuation daily pivot right here, and just this is a reversal pivot. This is a continuation pivot. I do believe the market has some really good chances of eventually trading around this level, and if it does, I will be looking for the same an SFP of the level and a long. This will be the higher probability trades that I can see uh, Bitcoin presenting over the next couple days or maybe weeks even. Remember, you first you always need your levels. If you just start looking for a long, for instance, right? Let's say you're bored and you want to start looking for a long right now because of any reason. Okay, you're going to end up most likely like those guys right here. the market is not managing to create an uptrend, so your stops are in danger. And this is something that I've learned lately how to use in practice. But you could argue that it's something that we've always seen in this market when the and in any market for that reason, when the market actually cannot trend, it will pivot to balance, and this is what is happening right here. But during the period of consolidation, you have people trying to build positions because they want to bet on direction. Let's say you're a person that wants to trade long right here. You've seen this strip 2 days ago, and you said, okay, I want to be part of the wave that covers this move because we have a gap here too. So you maybe you can call this a preemptive bullish checkmate, and you have a target. You know you're going to take profits here. It's not impossible that that happens, but what's the problem with that approach? You're living your invalidation and in a very obvious place. It's a place where not only you are watching to play this, but people with a lot much effect on the market is also seeing that. And this is a very tempting place to force a breakdown and take you out. Force a breakdown. Once you're out, the market most likely goes up. So that's a way in which you can actually analyze price action when you see a tight range. You can either be part of the liquidity and provide your stock liquidity in an obvious place, or you could wait for the obvious trade setup to fail and then enter a much more um, high reward trade, because most of the people, I don't want to call dumb money. I've seen that. Sorry, I have a bit of a cold. As I was saying, I've seen that dumb money idea. At the end of the day, we all are dumb money, and even smart money will be dumb money at some point. So don't think about the market in those terms. Think about it in terms of probability. You have a probability of a scam pump, so to speak, and demand appearing out of nowhere here on a Sunday evening. Or you could also have the case of the people getting out of their positions, being forced out of their positions, and then you have a much clearer chance to trade. So that for me, what I'm actually expecting right now, because I don't want to take an early stop or whatever, I'll be looking for the sweep of this week, and then I'll look for a long, not on BTC. Another thing that I realized the other day was this trade. If you remember, it's not on this chart in particular. It's on this chart. We had this idea. We had this idea that I planned on the 4 hour with a set of um, very useful confluences that I've been using a lot lately. For instance, one of the confluences was this fail to return area. Remember what a fail to return area is? Is a section of the price action. This was the current range at the moment. This uh, range high, range low, range low, range high, range low. No, there was a breakdown. So there's a lot of trap people, and this is the typical. Uh, this is the typical price action structure that it forms, which is called an after return, failure to return. Amazing. My writing is amazing. Why fail to return? Because the market fails to return to the obvious place and simply breaks down. So this was a really good confluence of mine that I like to use a lot. There was also this golden pocket. I don't tend to use them a lot, but I know it's a solid subjective measure, if you want to call it that way, when you want to place your trades. And also the most important part in this case, besides the fail to return area, was that I've been using this. this following trend following indicator, which is Hall Suite. In this case, I like to watch the lower time frame price action, but the showing me the trend on a higher time frame price action. For instance, this is the regular price action, and as you can see, as this is a moving average, it's showing me a lot of noise. You could say, "Oh, we're bullish here because the trend flipped green." No, it didn't. Why? Because moving averages don't work well when there's a range. So, and I remember a guy asking this a few days ago, I think, uh, about moving averages and how to use them. Try to not to use moving averages in the same time frame. With even if you don't use whole sweep, let's check EMA. Well, this is a much larger EMA, but you can see that as when the market starts to chop, it's not here the market is trending, for instance, and gave you a good entry. When the market starts to chop, it won't give you an entry, it will give you mostly noise. So I like to use whole MA with the higher time frame setting, and always, I mean not always, but it is a really cool indicator for where to place potential huge rejections and reversals on a lower time frame, but looking at the higher time frame trend. So, for instance, let's say you wanted to swing short Bitcoin at some point, you could have shorted here. Where was the second option to short Bitcoin from that perspective? It was here. It was here. Why? Because the lower time frames, you were monitoring lower time frames. I mean, um, are reaching an area of high probability of rejection. Therefore, I wanted to take this trade. I called the trade around here because I thought the market was going to jump higher and just reject. But what happened, and this was really, really curious as well. Um, I woke up the next day and I already saw price of Bitcoin around here on these lows, creating these lows. And then I canceled the trade because I said, okay, the move was more or less, it was an extended move. So I don't want to take this trade again if it comes back to entry. Um, the whole MA at the time was here. So I'd say, this is the replay. I'd say at the moment, okay, I really don't think we're going to get a substantial chance of testing this trend because I thought we were going to break down even further. But what happened? Yes, the market didn't trend downwards after that, but instead created a new range, and we tested the same area I wanted to short in. And as a result, I missed to take a really good setup. So is this something I'm complaining about? No, I'm trying to teach you how to sometimes keep your higher probability confluences alive because those are the ones that you can actually bet more on, and those are the ones you can be more confident about. And sometimes you don't have to really ditch them so far because and this is something really cool as well. I decided to cancel this trade first thing in the morning when I just woke up. I didn't even have breakfast that day. And I've been noticing this on my trading a lot. The first trading decision, usually in the morning and also very late at night, they are costing me a lot of capital. Why? Because I'm either too sleepy in the morning, or I'm too tired and yeah, again sleepy in the night. So I think I had the sweet spot when it is around this time of the day. I just had an early lunch and I'm okay. I think well today is a Sunday, right? But I think I'm okay. I'm awake. So I think if you can learn from my experience and my mistakes as well, try to focus on a time where you statistically do well in the market. Don't try to force something just because you want to be in a trade. Which leads me to this next topic. What do we do right now, right here? Okay, we are bored. We might want to get into a trade, but we discuss the possibilities. I mean, you can assign a level of probability to an sorry, a Sunday scam pump and place your stop in a logical place, obvious place as well, and you have your target. What happens if this and it doesn't end up happening? Okay, you took your chances. You can really read the future. It doesn't work that way. Trade doesn't work that way. You just take your chances based upon a probability you think you have. Um, Sometimes it's really cool to have some sort of record of how many times you actually had any luck or any success testing doing certain strategy. And we were discussing this as well in recovery the other days. Like I don't really know what I'm doing wrong. Like a person was telling me I always take the bad trades or something like that. It's not about you taking the bad trades. It's maybe statistically speaking, you're taking a particular set of confluences and in a time of the day. And maybe it's not even your trade, it's a trade you're following from a person, but it has really bad statistics. Like terrible. You know, like I've been telling you, almost all my losing trades come early in the morning or late at night. So I shouldn't even be trading at that time. I might be online on Discord, whatever, but I shouldn't be trading at the time. So that in regards to how to conceptualize this and how to not to get frustrated either. I know for a fact that if this pumps right up here, I won't be as mad as if I got stopped on a Sunday evening in a really stupid trade, and which is statistically speaking is terrible for me, and I don't do that well. It doesn't mean that I mean, there's a possibility the market goes up. Of course, there's always a non-zero chance that that scenario happens, but it's not what I focus on, and I think you shouldn't focus on that either. Uh, that in regards to how to remove emotions when it comes to decision trading. So enough with Bitcoin for now. I don't think it's doing anything really interesting. Um, I wanted to show you this platform, Velo. Um, it's really cool. And when it comes to order flow, you can basically enter here. And you have a lot of um, order flow section. Sorry, market sections. You can check. The one I'm checking at the moment is simply the market one. When you go to the market one, you can here define. Um, I'm using this a lot. Let's say in large caps, the increase in open interest and in price change is going to be um, in percentage terms always smaller than in the small caps, and that has to do with the volatility you can expect. So, for instance, if we go to mid cap, because there was this trade that I missed and I misplayed. Tomo, this is the trade. Tomo, this trade. What happened with Tomo? Tomo was having at the time the highest open interest increase at the moment. Right now, Sun has the highest open interest from this basket. Remember, these are mid caps. So, what you can infer from this spaghetti chart in open interest, you can infer that people that in a dead market like the one we're seeing now, you're going to have a chance to trade something which actually has some volatility. And at the time, there was a lot of short open interest in Tomo. And Tomo, if you take a look also at the high time frame price action, has given us quite a scammy price action to trade, and all of these were short squeezes. So you have a few tools now to understand and say, okay, maybe tell me something I want to be trading, as opposed to I don't know, let's say let's say why should I be trading something like I don't even know what this is. Vico, well, no, bad example. Why should I be trading something like Balancer, let's say, which has zero volatility, which is a really boring coin, when I have Tomo in the same basket, which does a much more interesting price action and more readable. So in cases like this is when you can use these tools and say, okay, let's do an example. Sand. We see sand. I don't need this. So we have sand right here. Mhm. Let's do a complete rundown to see if there's something to trade here or not. Remove everything. We go to the monthly chart. Awful price action, as most of the dead coins from an old cycle. Can you hear me okay? Uh, okay. Um, there we go. So we go and we start delineating, as always, our pivots. What is a pivot? This is a pivot. I already can see pivots with a naked eye because I've been doing this for like a year. But if you're new to the content, I'll teach you right now. A pivot is something it's a line. It's basically just an array of color that I draw in the monthly, weekly, and daily charts. Why? Because I think those are the areas. And first of all, there's this theory, this idea that the higher time frames tend to have a higher level of accuracy when it comes to most more lower time frame traders paying attention to the or having to think it twice before trying to break them. So that's why they're good pivots. For instance, if I were to bet on a short right here, and I see this structure in the market, which is a monthly pivot, which for me is a purple color line. There we go. This is a monthly pivot. This is another monthly pivot, but we are only paying attention to the ones that are closer. It's a monthly pivot. Okay, so you see in the monthly chart, there's this price action, and you say, okay, I want to be sure because I think this coin has no feature and blah blah blah, and a fundamental analysis and Burj Khalifa type of price action, whatever. Okay, you're gonna be short in this coin. Okay, but pay attention that there is this level of huge reversal on the price action that you have to fight against. So if you are in the short side, you actually do need a lot of firepower to go through it because it's a level that most of the market is using, is watching. It's not some 1 minute. It's not some 1 minute structure in an illiquid coin that can easily get breaken. For instance, here is a pivot as well, but the market actually just does a peek through it, and but let's go to the point. So a pivot, if you this is a weekly chart now. If we analyze a pivot on a lower time frame, this is a weekly lower time frame comparison, we can see that the market, there's another pivot right here, another pivot right here. This is an orange line. It's a weekly pivot. And there's a confluence, a double confluence here, because when the market actually, this was the time when the people printed on January of this year, and the monthly pivot started. However, the price actually tested that level before and managed to close above, and we had a small rally. So you can already, and only with this tool, get your levels where you want to trade in, and that's the main idea of the context. So we have a pivot right here. We saw a weekly candle closing above, so we can consider the price for the time being is in some sort of support. Support is support until broken, and it's not perfect, but I think it's a good confluence because I've tested it before of where you want to be engaging with the market. For instance, an idea you can already have. If we ever manage to go here, an SFP, this is going to be a massive short. Like, don't think it twice. This is a high level of rejection. This is a weekly, a higher time frame pivot. If you manage to see this in a 4 hour, you just slam short. Right? It's very likely. Whoops! It's very likely. This is not short. This one that it works. Why? Because the market has to actually work a lot in terms of breaking that level. It's a level used by higher time frame traders. So your 4 hour short is not going to do that much damage to it. You really, really, really have to have a lot of volume to cross above and continue the uptrend. If not, the market just tends to range. Remember that the natural state, maybe this is something people who were born like me on a bull market had a lot of struggle for a while understanding. The market for the most part is not ranging. I mean, yeah, it's not trending. There is a trend here, there's a trend here, there's a trend here. But for the most part, if you actually pay attention to the day-to-day price action, the market is doing nothing. It's an untradeable mess until something breaks. And that's why I think it's much more reliable if your focus is on day trading to pay attention to how to trade a range. For instance, right here, what could we infer? Just based on the pivots, we could infer that if we have another SFP here, we just go long, and where do you take your where do you take your profits? Sorry, at mid range, which is, oh, look at this casualty, this coincidence at a daily pivot, So you start to scale your confidences, even if you don't use them all, and you can have a pretty good understanding of where it makes sense to be spending your day trading and when it doesn't make sense to spend your day trading. For instance, and we were mentioning this in the Bitcoin example. Why in the world should I be trading Bitcoin when it's doing absolutely nothing? Don't do it. Try to focus on something which is actually moving, and try to focus on something which is actually moving near close to a significant area. So going back to this, there is a lot of open interest on a lot. 6% increase in open interest. It's not a huge sorry amount, but it's significant for a Sunday. So we can go to the lower time frame. We already have a level. So I'm all over the place, but it's the way I stick. We can, and this is, yeah, look at this. This is another level of interest. If you remember, what is this? Some people call it a supply zone. I call them fail to return areas. Why? Because of what I explained before. It's an area where the market was supposed to come back. In this case, was not a range per se, but it was a trend. And it was the area where the trend definitely broke. So if we ever manage to go above the daily pivot and go here, you can look for another short right here. So that's how you start um, finding places where to trade, and you avoid, and maybe you can just set an alert right here. You set an alert, and when it rings, it's because it's time to pay attention. You don't need to be all the time on top of the market. I forget a lot of trades, a lot of setups. I always forget because I have a really really terrible memory. That's why alerts are so useful. When the market actually trades close to your levels, you pay attention, and that's why drawing. I remember I was talking to Tem the other day. It's a really cool guy on charts ideas. Um, and we were trying to discuss the same topic. Like, you don't need to treat every single chart as the same. So, for instance, if you're a trend following trader, did you see a trend right here? No, you don't. Maybe there was one here, but not anymore. Not anymore. And you shouldn't be trying to force something like this, for instance, to say, no, no, bro, this is a trend. I'm convinced this is a trend. It doesn't make any sense. Okay, so if your confluence is on present, forget about the chart, which is the feeling I'm having with Velo. To be honest, it's like, yeah, maybe this to open interest increase, but man, this structure is shit. Okay, let's continue with the example because we already started. We are in the 4 hour chart. In the 4 hour chart, let's delete this. In the 4 hour chart, the next step of what I look for is to start using a VWAP. So I'll put on a 3 month or quarterly VWAP to see if why, especially now, because there is price is not traded near any pivot. So I should be actually looking for something else in order to justify any type of trade. And I can certainly justify the short here because it is also an untested quarterly VWAP. So, same idea. The market triggers my alert. SFPs on this level, we go short. This is just another way of planning in advance what level you want to trade in. So this is a VWAPs are really useful for that. It's like a POC. I don't know. Maybe not everyone uses VWAPs, but with VWAP is essential like a naked point of control. This is a naked point of control right here. So we might want to be interested in trading here because of the effective return area, and also because there is a naked pivot. Sorry, VWAP. So okay, we already have a plan. You can even write. Here we go. You can even write on the alert. Nope, on the alert, something like short naked Q2 VWAP, and you don't even have to think it twice. So you now have a setup for when this happens. And if this happens like, I don't know, a month from now, you already have your cues because your memory will forget. If you just make a drawing on the chart and share it and whatever, you're going to forget. You have to lot. All of us have a lot of things to do with our days, and you are not going to be remembering how that Sunday evening you made a plan for maybe shorting this coin. No, just set the alert, set the significant levels, and wait. But anyway, let's go back to why I was using a VWAP. So 4 hour chart, quarterly VWAP. This quarter, which started in July, was very uneventful for the time being. It really didn't make much. So I already getting more and more discouraged to trade this coin. I mean, there's not really a good reason to be trading this coin at the moment, unless it's right here or unless it is right here. But again, uh, I like to lower than the time frame to 30 minutes, and I use a weekly VWAP. Why a weekly VWAP? VWAP. Well, it has um, the same information about volume distribution, but you're seeing it in a sorry, in a smaller chunks, so to speak. So for now, price rejected the current trend VWAP, the current weekly VWAP, which is going to close in a few hours, but it's not really showing you anything interesting. And to be honest, I won't be trading this coin. Maybe this. No, I won't be trading this coin at all. I'm using the 30-minute time frame, which is the day trading, so to speak, time frame. And I don't see anything to trade here. It's like, honestly, there is nothing to trade. I wouldn't be short in this because of any reason. I wouldn't be long in this because of any reason. The open interest data is not as significant in this context. Maybe I don't know, maybe if I manage to see something like 50% or 2x the regular open interest for this coin at this level. And I managed to see then that which all of those um, all of the concentration of the open interest is short, and then price actually ends up having like a daily close above this, let's go. We slam the long button because you have all the conditions. You have the context, you have the order flow data, which is showing you an anomaly, something completely out of the ordinary. You have a trigger based upon the price action, which is at the S of P, and you also have your invalidation, which is the simple invalidation below this low. And you're starting to see a trend. You have a much higher probability trade than just seeing something like, oh, funding is going negative. I should be short in this coin, or which I see a lot, guys. I mean, I've done that before. Like I used to be like the order flow guy, so to speak, from the group in a point, and I was obsessed with the thing. But the order flow is only useful. Look at this. This is funny. I was obsessed with making every single decision based upon order flow, and I was trading like shit. And because that's the truth, I was trading really poorly. Because the order flow is actually, I mean, it is a very useful confluence, but only at a specific context in the price actions. Always start with the price action, then you go. I'm gonna take a screenshot of this. Sorry, it's too cool. Too. As I was mentioning, um, it is super useful. It is super useful, but only in a certain context. Jokes aside and everything, it is going to help you with timing. It's going to help you with a lot of things, but only use order flow when it's relevant, which is at significant context, such as here. Here, there is no context to be used in order flow. So that's how I would go about taking a trade or not taking a trade in a particular yeah, in a particular day, in any day. So another interesting, well, mid caps for the time being are being quite shit. So we are not going to trade anything. Let's go check small caps. Small cap. Any anomaly? Gala's having a lot of people getting stopped apparently, which is this Silicon Magic. Okay, let's check Magic. Oh, okay. I hope this was more or less explicative of what I was trying to say in terms of when and why to use order flow. From this week on, I'm going to start sharing more order flow content because I think that is if the market starts to get um, PVP or whatever you want to call it, which to me means more is coming in, like the sense of more people are going to be eager to enter trades in anticipation. I think we're gonna have really good order flow based setups like the trap trader setup, or as I was mentioning before with BTC USD. With Bitcoin, um, you're going to have a lot of these people trying to build positions here, getting stopped, and you have easy trades. To be honest, these are really easy trades to make. It maybe it's not easy to call, but I'll do my best so we can participate in these groups on this type of setup. Anyway, that was like an announcement I wanted to make as well. Expect more order flow content from my channel, and in general, I also would like to make order flow in sorry, in this particular format where we see the trades live, because I think it's much easier to explain that way. And we were going to take a look at Magic. Let's see, Magic is doing something interesting. Magic. Holy shit. Okay, this is most likely a short squeeze. Let me check here. 1 second. I'm going to log in a different window and enter here. Um, I just realized I'm not putting any music today, but I'm having a calmer time. I really have a bit of a tough time when I have to concentrate with music. Magic, magic, open, interest. Binance always has most of the open interest. To be honest, at times I don't even know why I check all the aggregated open interest, but Binance, man, they're after every single coin. So here I load my trusty template. As you remember, this is a very basic template I like to use, which has price. I think this is actually like the default template for every person on Twitter. I copied this from something that JZ had. It's not something I came up with. It has price, aggregated open interest, CBD spot, CBD futures, funding. Remember what I mean. What funding means. You don't overcomplicate it. Funding negative means that the spot book is trading at a premium against perpetuals, and positive funding means that perpetuals are trading at a premium with against against the spot. Is it always important to check at funding? No, it's not. Please stop looking at funding as if it were an oscillator, because it's not. Unless you see something like a ridiculous, like, and I mean s- something like 300 APR in funding. Don't look at it as if it were oversold or overbought type of conditions, because for the most part it's just going to confuse you. It's not the way to use it. Anyway, funding and then aggregated liquidations. If we see a lot of buy on the aggregated liquidations, it means that these are forced buys, and that's why you also see the stablecoin CBD, which is this yellow line, spike so high. It's not only about new longs entering, as you can see, a lot of longs also are entering at the same time. But this is a huge level of liquidation from whom? From impatient people who are building positions right here, and they all wanted to short for some reason a coin that was doing basically nothing. That this is just imagine Bitcoin does this overnight. That would be cool, isn't it? Anyway, this is like a good example of how to get wrecked. It's like price doing absolutely nothing and you take a directional bet. It is a 50-50 bet. You can always get it right, of course. You can also lose, but because of being impatient. And I've been trying a lot also, because I really do want to improve my trading for the group and for myself too. Um, to not be impatient. Like, I know it's boring, but I don't think being bored is a justification to just put a bet in something. If I'm bored, I put $100 on Rollbit and I go play the roulette. And I say, okay, this is my my money. I allow to go to zero, or I even go to Digital and buy some scams. But don't lose your money in a so little entertaining way as it is trading futures on a Sunday evening. Don't do that, please. Anyway, I don't even remember why we were looking at. Yeah, we were looking at this because of the increase in open interest. We can see here that among the small caps, Magic had a huge increase in open interest, and this is something which relates to what we were seeing in Coinalyze right here. This increase in open interest was significant in terms of percentage. That's why in terms of, where's my tool here? In terms, yeah, it was a 40% increase in open interest. It's a lot for a small coin. It's a lot. And for a Friday night. Sorry, for a, yeah, for a Sunday morning. It's a lot too. So how can we dissect this move? The CBDs are a bit messy, to be honest. When they are so intertwined, I don't pay much attention to them. But we can see here that there is a huge level of longs also opening positions. Um, is it? Let me check. For the most part, sports spot started selling heavily in this. This is the point where they both start selling. The spot the and also opening this part right here, if I'm correct. I mean, I'm always open to interpretation. We see decrease in open interest. This is mostly long open interest. This to me is longs taking profits. And you can see why they're taking profit. Well, taking profit. They might be getting liquidated as well, right? Look at this. But it's not a huge amount of liquidation. So for the most part, I think longs which forced this breakout out of this really tight range, they are now stepping out of the coin. When you see this, you usually can either fade it, and because I actually this looks like an FTG, isn't it? I'm not perfect at FTG. I've been studying them with Guru, but I think you can call this an FTG. Sorry, an FT. Yeah, an FTG is failure to gain pattern. You could be eyeing for a short right here because we have this SFP candle right here. The trend clearly is no longer an uptrend; it's more of a range. Just keep in mind that if this was a deviation, you have up to here to confirm it was a deviation, and the uptrend continues. Sorry, and the range continues. If this starts closing higher, you get the fuck out of here. Why? Because it's not a position where you want to be in. I don't know. It's tough to trade ranges. To trade ranges is quite tough. Uh, because it's tough to trade with hard stuff. But it is what it is. Nobody's forcing you to trade this coin either. Anyway, um, what I can see here is this potential short trigger because you have this gap right here. And remember, if you have a gap on the price action, you no longer have longs sustaining the auction because they are starting to take profits after the scam move. You can start to think, okay, maybe shorts have now a chance to enter a position and to make some money. And if I were this, if I were a person trying to go long, would I actually be long in here? I mean, think about that as well. It's not always about the order flow. Remember, price action always comes first. So your longs are starting to take profit also because they are failing. The other longs are failing to make an uptrend, and it makes sense. I mean, if you're making money, why would you still hold a coin which is going down? It is dumb to think that way. So in case this short actually works, I mean you can take the trade based upon an FTG right here. You can probably do it. Um, yeah, yeah. I think that's all I can infer from this coin. I don't really see much in it, to be honest. Besides that, I do see what my eye is already trained to see, which is a gap where not many longs are going to buy. Like, come on, what do you expect price to do this and go higher? I mean, it could happen, maybe, but from a market structure perspective, you will be maybe the only guy bidding right here, and you just try to be on the strong side of the auction. Don't try to be a hero, not in times like this. Anyway, that's how I could read this with this template. If you want this template, I don't know how to share this, but it's super simple. I think if you just read this, you can add them. It's not that complicated. to be honest. Uh, so well, that will be it. That will be it in terms of what I'm looking at the moment. Pretty boring day. Let's be honest. It's pretty boring day. Uh, there there was let's see, 4 hours. Last 4 hours. What is getting wrecked? Gala. Okay, let's take a look at Gala. I like this type of. Oh, sorry, we didn't even. Hmm, we didn't. We didn't even. And let's finish with magic first. Why we gonna finish with magic? Because we didn't take a look at the price action, and as always, price action goes first. So we remove the indicator. We go to the monthly chart. Always the same, guys. It's always the same. I do have some pivots from before, but I'm going to remove them. Do we see a monthly pivot right here? I see one here and one here, but this is cool. When it's a good example. When I see only continuation pivots, which is like up only, down only, I don't use that time frame. I prefer to. I always try to focus more on this type of pivots. Why? Because reversals tend to be the top and bottom of ranges. You can easily say there is a pivot right here, here. It's a weekly one. Okay. And there's another right here, another weekly one. There we go. We have a range. We have a range to work with. Um, we won't pay attention to this one because the price first needs to go below this. So this is our context. This is fantastic. Why I always bang about the pivots and this and pivots that they are just lines on the chart, but they make life so easy. It's like you already know where to trade and where to avoid to trade. It is super not complicated to just use the conference for that purpose. Do we see something interesting right here on the daily chart? Besides the fact that it's trading in a downtrend. Hmm. This could have been a daily build right here, for sure. But look at how it's being slaughtered. Basically, price is not giving a fuck about this pivot. This is a good example of when the conferences don't work. This is a good example. What do we do on the 4 hour chart? We turn on the VWAP, quarterly VWAP. This is a mechanical process, guys. I mean, if you are for any whatever reason interested in how I think, I always do exactly the same. When you ask me for a chart, or when I try to help you in some way, in some capacity that I have with your charts, and you say something like, "What are your thoughts on this and that?" I do this. I do this same exact process because it's something that it makes it easier for me to decide what do I want to do. Uh, so we basically could say that after after losing the second quarter of the year VWAP, the market managed to re-enter again here, and it failed miserable to do so. Value area lows are also really good contextual areas. Now it is rejecting and creating some really nasty type of rejection weeks just at the current quarterly VWAP, which only has 1 month. I don't tend to use the developing quarterly VWAP because it can be very noisy. It's like for that I actually just prefer to go to the lower time frame, use the weekly one, and at least I do have a bit more of detail of how the past week was behaving. I also can see if there was some level that might be hidden on the. Yes, look at this. This was an untapped VWAP from one from 2 weeks ago, which is now um, being the place where price is rejecting from. But as you can see, this is like an optional type of thing. The main confluence will be on the price action. What do we see here? This is interesting. We are on the 30-minute chart. There is a daily pivot right here, which is the one that is basically didn't work with this period of consolidation right here. But we also have previous week value area high and current week VWAP. This is technically a trending move. So there will be some level of rejection right here. If you want to place along, I'm going to place an alert. Come on. If you want to place along, to just above the daily pivot and just set an alert. Okay? Why? Because I don't want to be bidding in the middle of a gap. That's the sole reason. I mean, this is what there was a scam pump for whatever reason. Remember how this should develop. This price was doing basically nothing. A lot of new buying entered the scene and liquidated a bunch of shorts, and then nothing else. That's all the move has done for us. So I'm not placing my entire account or whatever, thinking, okay, this is going to be the trade of the century. No, but it's going to be probably a place where the shorts are going to take the profits because it makes sense. And what happens when shorts take profits? They have to buy. Remember, they have to. Here, they have to buy. Here they were forced to take profits, so to speak. They were forced to close at loss, and they had to buy. So always, it's a good idea to pay attention to what happens to the on-top levels. Maybe the daily pivot is not working as expected, and this can be a huge deviation. But we do have using this is the same as a volume profile. Remember, this is a value at a high, this is the VWAP, this is the PLC. So I do expect some level of reaction. If by in the next few hours we do have this move and we have an SFP, we're gonna go long. If and yeah, that would be it. I wouldn't short this. To be honest, I think it's too late to be shorting this, unless maybe we get another test at this level. Unless we get another test at this level. But it's not my favorite counter trade, especially because people were in danger here. I could be in danger here. Pick your spot. This is not necessary. I mean, remember, we're doing this because we are bored on a Sunday evening. We're not doing this because we are eager to trade. We're just trying to have a conversation. We're trying to have a good chat. We haven't talked a lot, and I'm trying to um how can I say it? I'm trying to show you the thought process I have when it comes to analyzing the chart. And if you have any question about it, then you can also ask me, and you can also understand it a little bit better when we talk, let's say in charts or in any other place. You can understand a little bit better why I do the things I do. That will be the main idea. It's not like we came here looking to longer show magic or whatever. That's not the idea. But anyway. Well, that would be the way to analyze the chart from the monthly to the 30 minutes or even 15 or whatever you want to use and actually make a decision. So remember, always start with the context. Then you can, after you have your color lines, your fantastic color lines, you start to go lower on the price section. Start to look for patterns. You maybe see an FTG, inverse head and shoulders, or whatever. You start to turn on your indicators. In my case, I use VWAPs because they also have to do with the context. I want to know where the area of most volume was, which is a VWAP or PLC. And if it's untapped, I do think there is a good confluence there to short or to long or whatever. Then we go even lower and more granular in the price section to see what is actually happening right now. And if we can jump in the trade right now, or if you should avoid it because, for instance, would you short here? Yeah, maybe you can short here. I mean, techni- technically, the trend is down. The trend is completely down. So this is maybe a good example. So I like to use a 30-minute hold, the original one, and when there is this first rejection right here, It works the same as the rejection on the higher time frame, and especially if the price is already within a value. This is a value. This is a value area. If price is already within a value area, it's going to have it tough to escape from the value area, because this is like just 30% of the volume transacted. The 60% of the volume, even more, 70% of the volume transacted is within the value area. So price is going to tend to gravitate towards these points of interest in the price action. It's not going to gravitate as much unless the trend is super strong. Unless the trend is so strong that it doesn't give a fuck about volume and doesn't give a fuck about anything. And in that case, you're just going to be basically uh, you're not gonna have a lot to do with that. If this reverses right here, it's because somebody is really willing to push the price higher in this illiquid coin, which is okay. But there, I don't have any read and I don't have any edge either. Maybe somebody else's time, not mine. In any case, my training is mostly based on levels. I don't know if you have noticed that, but um, I just have my levels and I try to trade out my levels as much as I can. And I try to use the order flow when it comes to finding levels of interest. But if not, I'm just okay. I don't need to be trading in a condition that is most likely going to confuse me or make me lose money. So okay, that would be it for now. I don't think there's much to cover besides that. We'll cover this tool, pretty cool tool, Velo that app. Try to check it out. If you have any questions, I'm gonna be using this a lot in the foreseeable future because of this. It's an already built spaghetti chart and something that I actually struggled a lot all my during this the time I've been trading is to actually build a proper spaghetti chart. I know it's easy. I know it's something that you just have to put a little bit of effort into it. But if it's already made for me, man, that's even better. And I don't have to think about that. And I know a lot of you guys have learned from JDrip, who was the person who basically introduced us all to the spaghetti chart and that uses it a lot. So if you are keen to use his style, I think you can take a look at this, and I think you're gonna do even better because his calls are already good. Imagine you have this pre-made sort of a tool already for you to use. Uh, in any case, hope you enjoyed the stream. Now I will be probably having some tea or something. I'll be back for the Asian session tonight, in around, I don't even know what time it is. Yeah, in around 5 hours or so. Yeah, yeah, and in 5 hours or so I will be back online. We have two alerts. We have one alert here on Magic. We have another in Sand, but the one that is most likely to get hit soon is this one. If you see something that I'm missing, let me know. I'm on the Discord almost every day, almost every time. But well, that's it. Hope you enjoy it. Hope you like it, and see you around.